Welcome back to Squawk Box. 6 straight sessions of rising yields now for the benchmark 10-year Treasury. Here now with some stock picks for your portfolio in this rising rate environment and what it means. Joe Terranovas here, Senior Managing Director at Virtus Investment Partners, of course, the CNBC contributor. It's great to see you. It has risen. It's risen remarkably. So who's the beneficiary of all this long term?
Good morning, Andrew. Well, I think the beneficiary is the equity market itself. It's long overdue. It's signaling that there's optimism surrounding reflation. And I would suggest there's more to come. We had a very similar type of behavior leading up to President Trump's inauguration in January of 2017. If we reflect back, the 10-year went from 1.80 to 2.60 from President Trump's election to inauguration. So it's a very similar optimistic type of behavior. There's certainly more room to the upside. Keep in mind the dividend yield on the S&P sits currently at around 1.55%. And I think it encourages a reallocation out of bond funds where you see significant allocations towards treasuries. As example, the AGG, which is the aggregate bond ETF, it's got 40% exposure to treasuries. I don't want to sit in that allocation anymore. That's going to come into the equities market.
Are there specific companies right now that you think are actually going to be winners as a result of this? I mean, we could talk, obviously, banks, things like that, but is there something we're not thinking about?
Well, Andrew, I think, yes. I think there's two strategies that are very important, then we'll get to some specific stocks. But from a strategic perspective, I think the most important question you could be asking yourself right now, and I think, Andrew, you know this, given what we're seeing with the SPACs and Bitcoin and the way we're pricing currently some of the emerging growth stocks, but you need to think about what is your risk. As example, keep in mind this morning, Zoom Video is doing an offering. Okay, that's going to obviously place some pressure on the stock. You need to ask yourself those questions. What is my risk? Secondarily, I believe that moving towards an equal weighted strategy is the right move to be implementing, moving away from market cap weighted. Now, if you're looking specifically in terms of sectors, you could find opportunities within all of the sectors. If you look at financials, I don't want to think first about money center banks. I want to think about wealth. I want to think about gathering wealth. I want to think about managing wealth. And I want to think about pricing wealth. And that takes you to Goldman Sachs, Morgan Stanley, BlackRock, or maybe a small cap research financial like FactSet, which is FDS. I think that is where you're going to find opportunity. I think also look at healthcare, which we kind of forgot about last year. Let's move a little bit away from that search for yield, which is where biotech was presenting, and let's move towards maybe a Merck and a big pharma type of name.
Shepard Smith here. Thanks for watching CNBC on YouTube.